Well, Sonny, here we are again. A brand new company, a brand new day. And today it has a hint of Japanese attached to it.
Yes, we're back, Seam. Really looking forward to this one. Today we're going to cover Nintendo.
Yeah, Nintendo has quite the year. It's up almost 24% this year. A couple years ago, it was down like 30%. And like the narrative has switched, and apparently people are appreciating the Pokémon and the Super Mario games again. The Switch 2 came out recently, so I think there's more than enough to cover. You're a Nintendo shareholder. For how long have you been a shareholder, and why?
So I've been a Nintendo shareholder since 2021, and it was funny, an interesting time, because obviously that was during peak COVID, where lots of shares were way up in value. And I discovered, have you heard of Ryan O'Connor at Crossroads Capital?
I have not, no.
He's maybe somebody we can, or you can certainly try and get on the podcast. I'd probably call him like the OG of the most up-to-date Nintendo thesis. And if anyone's really interested in this, definitely have a look at. He's released two quite big updates on Nintendo. I think first one was 2017, and then one just following that. So he laid out this fantastic thesis of why Nintendo was undervalued, all of the underappreciated IP, and how Nintendo was effectively switching to the Apple model, which we talked about last time. So for me, it made a lot of sense, and the valuation made sense. So I decided to become a shareholder then, and obviously I've now held the shares in the company for the past 4 years.
So are you a gamer? Are you attached to Nintendo historically, like when you grew up with, I don't know, Pokemon maybe?
I have got a Switch, and especially during COVID time, I played a lot of Zelda Breath of the Wild. I have not upgraded to the Switch 2. I do have a PlayStation 5, which might be a bit of sacrilege for this conversation, but I do love a bit of gaming now and again. What about yourself? Do you play anything?
I would call myself a gamer historically. I think I've played everything from GTA to Call of Duty to like The Last of Us to, I don't know, Spider-Man. But it's always been on either a PlayStation 1, 2, 3, 4, or 5 or an Xbox. Just about a year ago, my fiance decided to get a Nintendo Switch. So we do have one in the home now.
Well, hopefully maybe a bit of more research for you can play some games after this podcast.
From what I can say so far is that the Switch is more of like it feels more of like a family console where it's just laid back, play with your family, a couple games, maybe with your kids. There's a lot less competitiveness, it feels like. I don't know. It just feels more relaxed.
Yeah. Do you have any memories of Nintendo from when you were younger, sort of, that you cherish?
Oh my God, hell. Yes. I mean, I used to be, when I was like 6 to, I don't know, 10 maybe, the biggest Pokemon fan out there. I would wake up at like 6 in the morning. My parents would call me crazy, and I would watch Pokemon. And I would act like Pikachu all day long. It was, I have very fond memories of Pokemon mostly. Yeah, that's mostly it for me. I mean, I've played some Super Mario games when I was a little older, but mostly Pokemon, yeah. How about you?
Yeah, I mean, I always remember playing at friends' houses like the N64, playing Mario Kart, but there's definitely this memory I have where when we were younger, when Pokemon did come out, Pokemon Red and Pokemon Blue, I live in Edinburgh, and there's a town not too far, probably about an hour on the train, called Stirling, and it's not too far, but when you're younger, you think an hour is a long time on the train. And Pokemon, all the games were sold out everywhere. You could not get them. And my mum took me and my brother through for the day, and we saw Pokemon in the shop, and she bought us the games. I got Red, he got Pokemon Blue, and I just remember for hours, for sitting on the platform in the train station and then on the train playing Pokemon, and that was it. So probably played every Pokemon game for a good number of years after that. So, Seem, I'm just going to read this. I thought this summed up Nintendo perfectly. I came across this in my research. This is Nintendo's mission, which is to create reasons to choose Nintendo for unique, family-friendly entertainment that puts smiles on the faces of everyone who touches. And I think, we're reminiscing about Pokemon, and I think that sums up Nintendo pretty well. So I think that's a great way to start off the podcast.
I mean, it's basically what I just said without knowing the mission statement. It feels like a family gathering. It feels fun. So I think they're accomplishing their mission so far. So let's jump into Nintendo. Maybe without getting into the history too much, because it has been covered by dozens of great podcasts already. Maybe just give us some background on how Nintendo got started and just what makes it unique today.
So Nintendo is obviously a Japanese company. It was founded in 1889. It was founded with the manufacture and sale of, forgive my pronunciation here, but Hanafuda playing cards. In about 1983, they start releasing the sort of first hardware in obviously the Game Boy, which everybody is familiar with the Game Boy, or sort of our generation anyway, remembers it. And beyond that, they've continued to build around the digital IP. So just as some sort of overview numbers, Nintendo's sold about 6 billion video games over the course of its history and about 870 million hardware units globally. So that includes everything from the very first Game Boy right up until the Switch 2. And some of the largest franchises that Nintendo owns are obviously Mario, Donkey Kong, The Legend of Zelda, has a part share in, or sort of almost majority ownership of Pokemon, and then we've got the likes of Animal Crossing, Splatoon, and so on. So Nintendo's very much a family-centric or family-focused games console, and it comes with a lot of its sort of first-party IP. So around 80% of Nintendo games are Nintendo IP, which we'll certainly come on to on competition and how that differs. But Nintendo is almost like, for me, it's like Disney meets Apple, or the perfect scenario is Disney meets Apple in the sense of they produce the hardware, but they also own the IP.
I think that's a good comparison. Although one could argue that Nintendo still has strides to go compared to like a Disney IP-wise, thinking about parks, thinking about a streaming service, stuff like that. But I think it makes sense. So how does Nintendo make money mostly? What is like the most important thing they sell, and what is most profitable from what they're selling maybe?
So the two main sections, we'll come on to a few others, but the two main sections where Nintendo makes money is in hardware and in software sales. So hardware is largely now the Switch 2, which launched earlier this year and retails for about $449 off the end of September. Switch 2, since launch, had sold 10.36 million units. Nintendo then obviously has the games, which are called the software, and those come in as, you could call them digital. So customers can download those directly to Switch, which increases gross margin, or there obviously are physical copies as well, which probably appeal a lot more to bit more nostalgia and collectors. So those are the two main ways in which Nintendo makes money. Now, the business is obviously has a cyclicality about it in regards to the fact that it has to release a console to continue that engagement and keep up with competitors to a certain extent. However, with that, it is the case that because it's releasing hardware, which is typically lower margins, what we're seeing just now is Nintendo will generate higher revenue, but lower margins. Whereas as more gamers and more customers buy and adopt the Switch 2, we'll start to see those margins increase again, especially as there is this cadence of releases of games and software for Nintendo. And beyond that, I think we'll maybe come onto these by themselves, or well, at least one of them. There's the Nintendo Switch Online, which is the online subscription. And then just beyond that, there's also IP and royalties and a bit of sort of mobile income as well, which are all relatively small, but they do make up part of Nintendo's income. Especially we've seen how successful the Mario movie was, and Nintendo did benefit from that.
So talk us through the launch of the Switch 2. How has it been perceived? Is it selling better than the Switch 1? And what are some of the takeaways from the launch of the Switch 2 so far?
So just before we jump into that, it's maybe important to give you some context or some background on how Nintendo operates and why they do that. So basically, the Switch 2 could hardly have gone better, the launch of it. Um, if we reflect on the previous major successes that Nintendo's had, it was the Wii. And the Wii then had its successor in the Wii U. And this was a massive, massive stumbling block for Nintendo. They made a real mess of this. It was their worst ever selling console, and it was a misstep that basically left management terrified of cyclical downturns. So this has weighed on the share price for almost a decade, and it's led the business to sort of hoard piles of cash. As of obviously the Switch was released in 2017 and has gone on to sell over 154 million units with 1.3 billion games. So there was a lot of pressure on the Switch 2 to deliver because, as we had seen with the Wii, the successor stumbled, and I think there was a lot of fear for investors. You know, even if you just look at the historic share price, that the same could happen with the Switch 2. However, it did not. So as a shareholder, I was very happy because the Switch 2 launched in June this year, and as I've talked about, it obviously had a retail price of about sort of $450 or £400, and has gone on to sell, as of sort of the latest update, has gone on to sell about just over 10.5 million units. Nintendo is a sort of notoriously conservative company, and it has given us a forecast for the year, which they've increased to 19 million units. So there is optimism, and even I think shareholders who are less conservative than Nintendo will perhaps be a bit more ambitious around those numbers. Nintendo have also identified that they're on track to sell around 40 million software units or games, and I think it's really interesting because obviously they've had bundles. They've had the likes of Mario Kart bundled with the console when it was released. They've also had success with the likes of Donkey Kong Bonanza. And then beyond that, where Nintendo have hopefully benefited or will benefit as well going forward is the Switch 2 is backwards compatible. So that's a really great ad for users and customers because historically a lot of Nintendo consoles were not backwards compatible. So if you had a Switch and you had your save games and you spent a lot of time building up to those, it could have been the case in the future that you couldn't have ported those over to the new console. But in this scenario, you can. The Switch 2 also coincides with Nintendo having about 100 million active users. So there is a little bit still a demand for the Switch, the original one, but that obviously as it enters its ninth year, we're starting to see sort of year on year decline. So I think as a shareholder, I would sort of say maybe be cautiously optimistic, but I'd say it couldn't have gone much better.
I've always wondered if there is a place for Nintendo in between like all the gaming consoles we have. It feels a bit different from PC gaming and console gaming on like a PlayStation or an Xbox. I feel like those three compete with each other in a sense.
So I think as a shareholder, obviously I was concerned because if you think back to the PlayStation, it was released, the first PlayStation 5 was released about 4 years ago now, and we're almost halfway through that cycle where the next PlayStation, which PlayStation still dominates the gaming market, and it is the scenario that probably 2027 we're going to see the PlayStation 6 come out. So Nintendo's almost 4 years behind by the time it's even launched the Switch 2, which is obviously has less power than the PS5, and obviously when the PS6 and obviously the next Xbox comes out, or it's obviously got the Series X just now, it's behind both in sort of graphic fidelity or processing power. But what I would, where I would maybe plant my flag in the ground is the fact that Nintendo does a couple of things right in comparison to competition. And, first of all, it's got that convenience of being portable. That doesn't obviously, it's not something that the PS5 or Series X offers. And again, yeah, I take on board that the console does fall short in terms of performance or sheer power, but it excels in sort of convenience and generally sort of customer experience when it comes to. And I mean, listen, it's certainly just about to come into this, but when it comes to those elements, Nintendo, as we've already touched on with our sort of mission statement, it's all about fun and it's sort of family friendly fun, and that is what Nintendo's about. It's about the 80% of the first party games that they release, they're Nintendo IP, and it's about putting smiles on people's faces. Whereas on the PS5, you might be sort of killing zombies or soldiers, but on the Switch and sort of Switch 2 as well, it's about having fun with, you could have a dad and their child both playing on the Switch at the same time. So I think that's Nintendo has almost carved out its own niche in comparison to competition.
Yeah, and you remember the Sony PSP?
Yeah.
Sony stopped the PSP due to competition from like smartphone, mobile gaming, and also piracy rates was a thing. It sort of shows how difficult it is, I guess, to stay relevant in this market. And I think Nintendo would have felt, wasn't it for like the unique IP they have. It's not hard to imagine these games being playable on like a mobile phone in a couple of years. I mean, the development of phones is going very fast, and that might be a risk to consider, I suppose. But they have this mode in IP that is very, very good. It's arguably one of the best intellectual property content bases out there.
And I think with the Switch, and especially the Switch 2 now, what we're starting to see is Nintendo's starting to get it. And, things that they should have maybe been incorporating years or even decades ago is, so their annual playing numbers, as of sort of the most recent report, are about 128 million users who have played the Switch or played their Switch console at least one point in the last 12 months. So that remains over 100 million, which is great. They've got sort of 100 million active accounts, they're calling it. And then they've got 34 million Nintendo Switch online accounts, and these are active subscribers who are paying as an upgrade or sort of an upsell on the Switch. So there's those two elements as well, which I think we've got to remember. It's funny because I think I see like this recurring pattern or recurring theme in a lot of our podcasts, whether it be like Games Workshop or even parts of like LVMH, that with Nintendo, it is the case that it's got this ecosystem strength because you've got these customers who are sticky to it. It's got first party IP. And then beyond that, they control the hardware as well, which you're not really, they've almost got, not totally, but they've almost got that full stack user experience, like right from the hardware to the IP that is appearing on the customer's screen. Nintendo owns that. And they're building this ecosystem out. So actually, I think where the real bull case for Nintendo is continue to scale this. And I think to your earlier point, you're maybe a bit cynical about, maybe correct me if I'm wrong here, but the fact that Nintendo doesn't have a sort of a larger addressable market. Is that correct? Am I correct in saying that?
Yeah, I just don't know how much more growth is available. Yeah.
So I think, but with that, where Nintendo can lead into is that ecosystem. And we'll come on to this in a second, but obviously a lot of PlayStation and Xbox's revenue is now going to be derived from their online ecosystems. Nintendo still has a lot of growth opportunity there.
So how about you take us through the competitive landscape and talk about some of Nintendo's biggest competitors and maybe their differences?
So as we've already touched on, PlayStation and Xbox, and then an element of sort of computer gaming, they're the biggest competitors for Nintendo. And perhaps a sort of secondary point that you've just mentioned is obviously mobile. So with that, PlayStation still remains the global console leader with about 45% market share. However, Nintendo has 27%. And as we've touched on, it certainly sits in a good position. That is the second biggest, or has the second largest market share. If we look at PlayStation Plus, I think what was an interesting number when I was doing my research for this is the fact that so if we consider Nintendo, who's sitting on about 34 million Nintendo Switch Online accounts, PlayStation is estimated to be sitting on about 51 million subscribers across all tiers. But because the PlayStation service has a higher cost, it means that the PlayStation generates about 5 billion in annual revenues from online subscribers, whereas Nintendo's generating about 600 million, which in comparison is just this tiny amount. As a business, again, that's why I'm optimistic about Nintendo can lean into that further. However, back to your earlier point, on the sort of NSO or the Nintendo Switch Online account, it maybe doesn't feel like you're getting the same, you're not getting this your money's worth in comparison to PlayStation. So yeah, I think we can talk about this a bit more. One thing I certainly want to draw your attention to as well, Seem, is the fact that recently, just I think, let me just get my date, but PlayStation basically released a Japan-only console at discounted rate, and it was reported, November 2025. Basically, PlayStation released a 50,000 yen console, so it's about $320 in a Japan-only market. And this was allegedly because Nintendo had exploded market share in the region because of the release of the Switch, which again, it's fantastic for Nintendo shareholders. I do think it's interesting as well that from doing my research, it seemed to be the case that both PlayStation and Xbox, they lose money on the hardware. It's not been definitively reported, but Nintendo on the Switch seems to have always made margin. Again, it seems to be the case, and it has been reported that the Switch 2 is making less margin, but Nintendo's never been a loss leader when it comes to hardware.
Yeah, and to your earlier point, it does feel like the Switch can live together with the other consoles, but I don't think it doesn't make sense to own a PlayStation and an Xbox unless you have kids and I don't know. But I would never buy an Xbox and a PlayStation, but I do have a PlayStation and a Switch because I think Nintendo is sort of operating like this niche, not in high-end gaming, but more in casual family gathering types of games. And I think it's doing really well. And the IP is their absolute, crown jewel. They can license their IP. They can earn royalties, which is basically 100% margin. They don't have to do anything for that. And if they don't want to license the IP, they keep it to themselves in their own hardware, in their own ecosystem, which means you need to get a Nintendo Switch.
Yeah, and if we consider the fact that obviously, so if you consider PlayStation and Xbox, they're relying on third-party developers to put out strong games, whereas
good point.
It's a double-edged sword because obviously Nintendo's relying on itself to put out strong titles, but in the same respect, if it puts out weak titles, then obviously software and game sales are going to suffer.
So is there anything else about the industry that is worth sharing?
I mean, listen, you can't get through a podcast nowadays without mentioning IP and AI integration. So I'm not totally sure. I think if you consider Microsoft, obviously they're strongly linked to OpenAI. They are the owners of Xbox. Will the sort of future PlayStations and Xboxes, based on their sort of processing power, lend themselves better to AI integration? Probably has a question mark around it. However, I'm pretty confident that because of sort of Nintendo's effectively weaker hardware, it's not going to move in that direction. So will that ultimately continue to sort of move towards this divide in sort of power and processing power that the competitors have? I'm not totally sure, but that's certainly one thing to be keep an eye on.
So we have already touched on the competitive advantage. We talked about the IP being a very strong competitive advantage, almost impossible to replicate. There's only one Pokemon. There's only one Zelda. It's already been done. We also touched on the ecosystem where the IP is integrated into the software and into the hardware of Nintendo. How strong do you think Nintendo's brand really is? Is there a company that comes close?
So I think we if we take a step back from just the consoles and the games, probably the best examples we've already mentioned them is Disney. I think Nintendo is a pretty close second to having the best IP in the world behind Disney. I think where they've really struggled historically is they've really struggled to unlock that IP, and they've been terrified. I think there's the terrible Mario movie that was released in the early 90s. I don't know if you came across this in your research at all. So I think since then, Nintendo have really been terrified of almost giving out their IP or partnering with anyone. But the best example we've seen recently has been obviously the Super Mario movie, which was released in 2023. So this was a partnership with Illumination, who are the studio behind Despicable Me. The movie generated about 1.3 billion globally. So 1.3 billion dollars globally, which again, there was obviously this fear among shareholders. If the movie was a flop, is that reflective of Nintendo's IP? And yes, I think it's sort of been reported that because Nintendo financed about 50% of the movie, they probably recorded about $275 million in profit. But actually, that wasn't the important element of the money. Was obviously a nice to have, but the fact is Nintendo have obviously introduced a new generation to their IP. So this is going to be followed by the next Super Mario movie in 2026, which will be the Super Mario Galaxy movie. There is going to be a live action Legend of Zelda. It'll be interesting to see how that plays out. And then there's already a rumor that Donkey Kong is in the works. So that in itself is there's comparisons to be drawn there between Nintendo and Disney because of the fact, obviously Disney is so prominent when it comes to movies. And in addition as well, Nintendo also has parks or sort of partnerships with Universal. So as of May 2025, they opened a sort of another physical presence in Universal Orlando with a part of the Universal Park with Nintendo, again reflective of Disney. So it's almost like they're borrowing parts from the Disney playbook here, where obviously they're so reliant on drawing in so much of the IP to the ecosystem to buy hardware, buy software, but they're introducing a lot of a new generation through movies, but also through potential parks, and then just beyond that as well, like something again little bit reminiscent of Apple is the fact they are bringing out their sort of direct stores. They just opened one in May in San Francisco. They've got 4 in Japan and 2 in the US. So they are conservative. They're a conservative company, and we'll come on to that. But they are moving in the right direction. They're not like a Disney who are going to have a movie out once a month, and they're not going to be releasing or having however many stores opening up. Probably just have not got the demand there, but they are starting to move in the right direction and unlock a lot of their IP in the right way.
Yeah, during our research on Games Workshop, this was pretty similar, where they are still searching for ways to really let their IP shine, especially in like this digital age, which can be quite difficult, I guess, which is pretty interesting to see in such a large company as well. From our research analyzing Shimano and the Japanese bike maker and Japan Railway Company, and talking to investors familiar with investing in Japan, it feels a bit like a culture thing. They're a lot more conservative compared to Americans. They like having lots of cash on their balance sheet, playing it safe, which means these companies can feel pretty safe. But their lack of taking chances, innovating and taking risks also limits their returns and opportunities. They can fall behind maybe. Do you think this applies to Nintendo as well, or are they different here?
I think you've hit the nail on the head when it comes to Nintendo's approach. Now, I've not covered any other Japanese companies in my research, but it does seem to be the case that with Nintendo, I've not noticed massive changes in their balance sheet. I would just assume that if they're going through this hardware cycle, when they're moving towards launching this new hardware, cash and equivalents should be down. But actually, cash and equivalents are sort of where they were in the last couple of years and haven't really moved. Now, Nintendo's sitting with no debt. It's got 13 billion in sort of cash and equivalents on the balance sheet, and it gives it again strategic flexibility. So, should they ever encounter this cyclical downturn because they release a poor console, it allows the company to survive. And let's not take away that Nintendo is about 137 years old, so it has been around a long time, and management is obviously thinking in decades, not in years. So there's pros and cons, again, sort of another double-edged sword, where we look at a lot of US-based companies and they invest heavily, and it for the last couple of decades has largely paid off, whereas Nintendo is it's not making these big bets. And as a shareholder, I'm delighted with what I'm seeing, but when you're sitting with 13 billion on the balance sheet and no debt, it's just like, is there not a better use of of your capital? So for me, I'd like to see them do more, and I think we'll sort of come into that as we wind things up later on. But yeah, it's an interesting culture, and I did see, maybe you can offer some input here because of your sort of research on Japan. But I had noticed, this was about 2023. I put a write up in out on Nintendo, and I think it was sort of it was obviously a lot of conservatism around Japan, as has been linked to the 1990s stock crash, and for a long time, the Tokyo Stock Exchange I've not got the exact data, but it was decades before it even returned to the peak of 1990s. So I think it is the case now. There is new rules coming out where the price to book ratio was effectively had to show improvement. So I've found a little bit of insight here. This was from my 2023 research. But what it was the fact that a lot of, about half of the listed companies on the Tokyo Stock Exchange, they had sort of price to book ratios under 1. And what the government were trying to do is force a bit of a cultural shift to demonstrate that it was no longer acceptable to build cash and avoid investment. So some Japanese companies were sort of announcing buyback plans, and I think Nintendo are relatively good at this. And again, a lot of cross shareholding in Japan is quite common. So companies will take small stakes in customers and suppliers as sort of gestures of goodwill. So they're trying to reduce this down. And again, not totally sure it's the right approach. It could be in the future, but just make companies like Nintendo a little bit more aggressive in the bets they're taking.
Yeah, I think that would be a good incentive to at least incentivize the companies to take a little more chances and risks, and while still being quite conservative. Before we jump into some of the numbers, we cannot skip the gem, the diamond within the IP, Pokémon. What does it mean for Nintendo, Pokémon?
So Pokémon is almost the staple. That's how I see it. It's like the linchpin of Nintendo. And Pokemon is something that, again, we've talked a lot about Disney, but it's arguably the best IP in the world, if you maybe consider just a single brand or sort of single franchise. So the number that's estimated is that since Pokemon was founded in 1996, it's had lifetime revenue of anywhere between sort of $90 to $1 billion across all of the IP releases and sort of licensed goods. Pokemon is not actually owned by Nintendo, maybe a misconception, but it's jointly owned by 3 companies, which are Nintendo, Game Freak, and Creatures Inc. So Game Freak, they're the studio that serve as the creators and obviously the mainline games. Nintendo also holds a sort of a minority share in Creatures, so this gives them additional leverage. In the last 29 years, we talked about the Red and Blue Pokemon games, but Nintendo's released about 11 major games, and it's just something that customers will continue to come back for year after year. The release of a new Pokemon game is effectively, it's an event, and a single Pokemon game can generate anywhere between sort of $1 and $2 billion in gross revenue, with development costs rumored to be less than 100 million. What's your takeaway on Pokemon Theme? How do you sort of remember it, and what's your feeling with how Nintendo are currently using Pokemon?
It's such a unique piece of intellectual property. From what I found, they sold over 28 billion trading cards, sold over 480 million games. Pokemon Go was a massive success, the transition to digital. I believe from what I found in like a Morningstar report somewhere was that Pokemon Go got like 5 or 7 Guinness Book of Records, from most downloads to most revenue for a single app. It was a massive success. There is a massive demand for these cards still. And not only cards, also just plushies or certain Pokemon gear. Is that still the case 50 years from now? I don't know. That will be when our generation, the Pokemon generation, gets a little older, but that will be a transition for them. But until then, I mean, there is so much more Pokemon room to grow. It's incredible. And I love Pokemon. I still love Pokemon. It still gives me a good feeling when thinking about it. I mean, the original cartoon with Ash Ketchum, I mean, legendary.
I used to watch it before I went to school in the morning, and then you would go in and you would trade your Pokemon cards, and then you
I
would
know.
play your Pokemon games on your Game Boy, and it was just everything.
It was the best time. Gotta catch 'em all.
Yes, maybe drop that one in the notes there. Linked to the
Yeah.
theme song.
So good.
Yeah, I mean, Pokemon, obviously you've touched on Pokemon Go there, which just got these great headwinds for the pandemic, and it got people outside. And obviously, what was really interesting, I don't know if you ever remember this, but when Pokemon Go was released, it wasn't actually produced by Nintendo. It was produced by Niantic, which Nintendo was actually an investor. But with Pokemon Go, because it was so successful and sort of had this crazy success, Nintendo's shares actually went up despite them earning next to no money from Pokemon Go. However, it was a scenario that there was a bit of a flywheel effect because it was driving awareness of Pokemon, the Pokemon brands. So, yeah, I'm going to bring out one final point though around Pokemon. It's maybe a bit of a bare point, and I think we'll come on to this later as well with how Nintendo operates. But we're looking, we're on the verge of seeing GTA 6 come out at some point next year, late next year, and GTA 6 probably going to be the most unprecedented game release in history. With Pokemon, it is a staple of Nintendo gamers. So Switch gamers, that is pretty much the one thing that draws them in is Pokemon. I think what fans and customers have been asking for so long is something that just creates a MMO, so like a massive multiplayer online game that takes elements, I suppose, of Pokemon Go and brings it to the console. Customers want something that blows them away, that could be a generational game. But how Nintendo operates and how the Pokemon company operate is obviously they're so conservative that effectively, yes, they're generating sort of maximum yen for not a lot of return, but they're unwilling. Again, look at the cash in the balance sheet. They're unwilling to take these big swings, and IP like Pokemon suffers because of that.
This was the main concern when analyzing these other Japanese companies. I think this would be a good bridge to the financials because the capital allocation for these companies is so conservative that they are highly profitable and they will be for a couple of years. But what about the future of, let's say, Nintendo 10 years from now, 20, 50 years from now? From what I remember, Shimano's market cap was 30 or 40% cash. That they are still not, using the cash to transition into e-bikes enough. They are falling behind on companies like Bosch in Europe. I feel like Nintendo is, from what I found so far, also they got to take some chances somewhere, I feel like. And only relying on the cash cows until they are no longer a cash cow is a dangerous game they're playing. What's your gut feeling on capital allocation?
Yeah, I would totally agree. So I think if we reflect on that, and probably a lot of people listening to this podcast, we all see ourselves as value investors, and we're always like, there's a margin of safety. And with Japanese companies, you think, great, there's this margin of safety, but they've got cash in the balance sheet where they can, in the future, invest and deliver future value. But it is the case that someone like Nintendo, and again, the sort of Japanese companies you're referring to, it doesn't have the same margin of safety that you consider with, say, a US-based company, because someone like Nintendo, yes, they've got cash in the balance sheet, but they're not willing to spend it. So it actually doesn't have the same impact. And you're totally right. What does the future look like? At some point, the Switch has been obviously really well received, but at some point in the future, there will be another console slip, and that will impact share price, revenue, and everything else that comes with it. And yes, they'll have the cash there to survive. But at this point, when the going is good, for me, this is the point where Nintendo should make those investments. So if we just consider Nintendo, as I've touched on already, they're sitting on around, so they've not got any debt. They're sitting on around 13 billion in cash and equivalents. So it's just about 10 billion, or sorry, $11 billion. And then, in fact, it takes up to about 14 billion in cash and securities. So again, fantastic margin of safety. But as a business, a lot of their cash goes into buybacks and dividends. They're not investing heavily in the likes of R&D like we would see in US-based companies.
And this can be a big danger to investors. I think the valuation currently reflects at least some future growth. And the fact that they're not really investing in R&D could mean that, a multiple compression eventually halves the share price. Could be a risk for shareholders getting in on the current valuation. They need to get at least some growth. I believe the PE is around 30. Yeah, definitely something to consider. So for investors looking into Nintendo, maybe we have shareholders listening. What sort of KPIs do you personally track for Nintendo?
So I think what's really important, we need to track obviously console sales, because ultimately, if without future console sales, you're not bringing new gamers online. So that will be important. We need to look at the number, software, so games sold as well. And then I think what's important as well going forward will be the margins and how those change over time. Because if the Switch 2 does have higher costs associated with it, it will be interesting to understand at what point does Nintendo generate higher margins again, linked more to the software than effectively the hardware. Because that's the point we're in. We've only sold as a company 10 million units of hardware. The Switch was 150, so 15 times that. So there's still a lot of runway to go before they get anywhere close to that. And obviously, there could be several years. So I think it's really important over the next 12 months to follow Nintendo's margins, see how those improve again as they sell more software over hardware.
You touched on GTA 6 a couple minutes ago. I can imagine a world where I think GTA 6 is going to be so immersive. I think you can earn like money within the digital economy. What if like Nintendo invests a little in GTA 6 and opens their own Pokémon stores within GTA 6, and you can buy like Pokémon cards within GTA 6 with real money and they earn royalties? Just something I thought of. That would be very cool.
Well, as a shareholder, I would like to see them make bigger bets. I mean, I will come back to GTA 6 in a minute, because I think if you're any sort of gamer whatsoever, you're going to be excited about that. But when it comes to making those bets, what I would actually link it closer to is something like Disney's bets during Bob Iger's tenure. So if you consider the acquisitions of Star Wars, Marvel, the Fox library, a lot of these were plug in and play IP. And yes, they're maybe milking them now, but they were fantastic acquisitions and have allowed Disney to become what they are today. Nintendo has done a great job with its own IP, but I would love to see them acquire some plug in and play IP, if you want to call it that, that's perhaps undervalued elsewhere. And Nintendo can do what it does, unlock that IP on its platform, and it gives users more software opportunities in the future. That's, for me, that's where I'd like to see them going. What's your thoughts on that?
Yeah, nothing really to add. I think I would agree. And I think this would be a great section to talk about the risks and opportunities for a company like Nintendo. We touched on hoarding cash as an increasing risk, the risk of not investing early enough in R&D, not staying ahead of competition, not innovating on IP. The other risk we touched on would be like a decline in console sales, which you touched on in the KPIs. So what other risks are you looking out for?
So I think first and foremost, we've seen the initial success anyway, of the Switch 2. We need to be very mindful of that and understand, is that momentum going to continue? Because it's had a lot of enthusiasm and adoption from early fans, but there's no guarantee that automatically continues. And what could make that stall is going to be software. Yes, people have been excited, but if the games that come out are not as widely adopted or as enjoyable, obviously that's going to lead to a downturn in console sales. So the Switch One set this huge bar for customers. In addition to that as well, we need to be mindful of Nintendo moving towards. We talked about competition, like the PlayStation and things, and the prices typically is the fact that Nintendo, the Switch, used to always be cheaper than the PlayStation or the Xbox, and that's why you and I both have a PlayStation and a Switch in our households. But the Switch 2 and a lot of the new software and the downloadable content is actually much more in line with the PlayStation and Xbox. So is the console, there's two elements there. Is the console moving towards competing more directly? And then obviously there's the risk that sort of these two console households fall away and just opt for a PlayStation instead. And then there's obviously going to be frustration from customers based on the fact that if you consider Pokemon Legends, once you sort of add on the DLC pack and the original game, you're looking at $100 for an experience. And that, to me, that's no longer family-friendly entertainment. That's quite expensive when you consider $100 for a single game, regardless of if it's Pokemon or not. And then lastly, as well, is just obviously the adoption and adaptation of big games. So let's briefly cover GTA 6. So this was in my research. GTA 5, so Grand Theft Auto 5, it has generated about 8 billion in revenue, with more than 200 million copies sold as of 2025. A lot of this income has been generated by Grand Theft Auto Online, where I think you're totally right. There's going to be this immersive experience with GTA 6. If we reflect on that investment, you're looking at about 6,000 to 7,500 developers reported to be contributing to the project, where their costs all in are going to be anywhere up to 2 billion. And there's a lot of expectations that the new GTA 6 will exceed $10 billion in lifetime revenue. Now, in fact, that could even be conservative. So for me, if you think, well, first, GTA 6 is very unlikely to be on the Switch for a long time, if at all. And in addition to that as well, it's like you look at that investment and you look at, again, there's no guarantee GTA 6 is going to be a success, but I'm fairly confident it will be based on their track history. If you consider that with the Switch, I would like to see that level of investment around real signature games that are going to draw in customers, where Nintendo has this great lock-in. They own the first-party IP. If you can make that generation-defining game, customers are going to buy the console to buy into that game, and that's not what we're seeing with the company. I think that's a real risk for the company and shareholders.
Talking about opportunities, the first opportunity you just mentioned is hopefully Nintendo eventually realizes they need to invest a little more in R&D, in their IP, be a little bit more, I guess, risky with their investments. What sort of opportunities would you like to see, or what opportunities do you see for Nintendo?
So first and foremost is obviously just the continued growth of the Switch. Again, it's been really positively received, and my hope as a shareholder is that we're just at the start of this cycle, and it can follow the trajectory of the first console that was 154 million units sold. Second of all, there's going to be the ongoing IP unlock. We've seen, again, huge success with the likes of the first Mario movie. We've got at least 2 future movies locked in, and I imagine if this becomes a sort of every couple of years success, Nintendo will just continue releasing that. And again, we've got this really nice flywheel effect where Nintendo can make money as a studio through the movies, but it's exposing a new generation to their IP. We've also got the shift to digital-only games, which is great. Nintendo is sitting at about 63% of all game purchases in 2025. They're in a digital format, which ultimately leads to higher margins. And lastly, for me, the big one has to be about that ecosystem. It has to be where they can really win is the fact that if you consider the buy-in for gamers into the PlayStation ecosystem, Nintendo can shift towards that. They've got over 100 million active accounts. They've got 34 million Nintendo Switch online users. They're at the start of this new console cycle. As a shareholder, that's where I want to see them win. I want to see them improve on the user and the gamer experience so they can ultimately charge these gamers more and include them more in the ecosystem. So that's where I think the opportunities lie for Nintendo. And then obviously lastly, we've covered it, but that 13 billion, where can they go and make big bets? For me, as a shareholder, I think it's investing in sort of plug and play IP, but you may have a different take on that.
You can do a super dividend.
Yeah, that would always be nice. I don't see where it's going to come from though, Steve. I can't see. I think we could be almost having the same conversation. I've looked back on my write-ups on Nintendo over the last 4 years, and nothing's changed, if I'm honest. Like, they've done great when it's came to their sort of roadmap of releases. Financially, they're in a similar position.
Do you think it would make sense for Nintendo to try and build their own streaming platform? A little Netflix-like, maybe even incorporating mobile games into the platform, just like Netflix?
Yeah, I wouldn't disagree with that. You know, there's certainly a smart way to include new, or generate a new audience or engage with an audience as a bit of fun. This is a way back, if anyone has time to sort of search through my old Substacks. But in 2021, I put a piece out that said Netflix should buy Nintendo. And actually, it was a bit as tongue in cheek, but it sort of made sense because of the fact that we look at Netflix's bid this week, and for HBO and Warner Brothers, and actually they could do a lot worse than Nintendo. So especially when Netflix for a while seemed to be pushing more towards a gaming setup. So listen, maybe that does. Again, I can't see it because I'm not totally confident or sure about the setup in Japan. But something like that sort of acquisition of Nintendo could make total sense for someone like Netflix or Disney out there.
Yeah, they'll never allow it, but it would be fun. I don't think the Japanese government would ever allow like the culture change. And going to Japan, anime is such a part of culture. Pokémon, Mario. I believe the Prime Minister once opened the Olympics in a Mario suit. It is just attached to Japanese culture, and I don't think they'll ever allow it. They might license the IP for a long time for a very expensive deal to Netflix. I don't see the problem there. HBO is probably not going to happen either. I don't think they're going to get it. I think someone will outbid them. I think it's a poor deal for Netflix as well, but that's a different story. IP, man, such a interesting thing to have as a company. It's such a unique advantage because it's so intangible. Everybody knows Pokemon, but you own the rights to make a Pokemon movie or a Pokemon card. How can you place like a value on that? It's so difficult.
It's funny because obviously we've talked a bit about historically the companies like Games Workshop and even LVMH. And there's a makeup in there that of how humans interpret things, that whether it be a Louis Vuitton handbag or Games Workshop figurines, that both of which from a practical perspective, you could buy for a tenth or even less of what you're paying these guys, and IP falls right into that category. And I think it's funny, I'm sort of starting to understand my investment style more based around the fact that obviously I've got shares in both those companies. I've got shares in Disney. As an investor, I seem to like intangible assets.
Yeah, apparently. I think those three examples are great IP examples. Let's call you the IP investor from now on. Yes. Name changing comment.
Yeah, but I don't know what the INP stand for. Listen, Sam, I really enjoyed this. I like Nintendo as a company. They are frustratingly conservative. As a shareholder, I like where the company is going. I'm a little bit concerned about the price of the shares right now. But as we talked about in our Google podcast, I do think the market is largely up. So I won't be buying any more at this price, but I don't think I'll be selling it.
All right. Sonny is holding on to Nintendo. I think that is the right way to go about a company like this. Like you said, this is a company to hold for decades, not a couple years. The share price will probably halve eventually again. when the cycle turns or when like something happens with IP. I think that's natural for a company like this. Disney, it happened to Disney many times. It happened to Apple a couple times. So it will happen to Nintendo as well. But hey, great company to own. Lovely IP. And we're going to enjoy the games, the IP, the cards, as long as we live. And it was fun to talk about a company like this.
Yeah, and I think, for me, just as a closing thought, I think we've talked about it before, I think, is the Lindy effect. And we talked about maybe a bit of the frustration around Nintendo, or my frustration about the investment. But as a conservative shareholder, in 100 years, will Nintendo still be around? I'd optimistically say yes.
Me too. Yeah. Whether it beats the market a couple hundred over the next 100 years, I don't know. I think it has done about 8% since going public. So pretty average. But the company is definitely still alive. And whether it's larger or smaller, that's up for debate. But the IP will still be here. That's my guess.
Great. Thanks very much for having me again.